Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Monday, June 8th, and the New York Knicks are in Game 3 tonight. We're going to be watching. Before we get to today's show, I want to highlight some reporting that the Information published today. Google and NVIDIA are considering Intel as its backup chip manufacturer. This comes as TSMC is struggling to keep up with overwhelming demand. You can read more about that on our website. We're also tracking Apple's Worldwide Developers Conference today. We'll learn about how the company plans to implement more Apple Intelligence features in its software ecosystem. We're also awaiting the blockbuster public debut of SpaceX. The company plans to list on the Nasdaq this Friday. This Wednesday, June 10th, I'll sit down with the reporters who have been leading the Information SpaceX coverage, Theo, Wayt, Valita Pao, and Corey Weinberg. The event is exclusive to subscribers. You can RSVP right now at theinformation.com/events. Today on the show, we will dig deep into one of the most interesting angles of this IPO. The man leading SpaceX's finances, Brett Johnson, we published a profile about the CFO that we're going to talk about very shortly. We're then going to shift gears and talk about recursive self-improvement in AI, what it is, why it's important, why companies are pouring money into it. And we're going to close out the show with a conversation with PwC about budget predictability in the era of AI and tokenmaxxing. It's going to be a great show, so let's get right on into it. To get us started, I want to bring on our Elon Musk reporter, Theo Wayt, to help set the scene for us. Theo, happy Monday to you. It is SpaceX week. How you doing?
I'm doing well. How are you?
I'm doing well. Okay, so give us the rundown here. Now and Friday, there's a lot of time between then. Give us the day by day. What should we be watching for? Just go ahead.
So most of the week is kind of just sitting here, nervously awaiting Thursday and Friday, which is when most of the action will be. The next few days, everyone's getting their orders in, and based on demand, SpaceX will finalize the IPO pricing on Thursday, and then the actual stock will start trading under SPCX on Friday. And SpaceX has said the pricing will be $135 a share, but that could still change and fluctuate, and we'll know the actual number on Thursday. So yeah, mostly we're just anxiously sitting around waiting.
Okay. Well, while we wait, I want to unpack a profile that you published over the weekend. You did a deep dive into CFO Brett Johnson. He is the man leading the IPO from a financial perspective for SpaceX. Tell me a little bit about Brett Johnson. I mean, how does he differ from Elon Musk?
So he's a very under the radar figure. I mean, there's a reason that we were the first people to really write a profile of him, which is that he's the ideal CFO, and that he's very understated. He's quiet. People describe him as steady and reliable, which doesn't obviously is a gigantic contrast with Elon, who gets all the attention. But he's been a survivor. He joined way back in 2011, when most people didn't know what SpaceX was, and he's been the first and only CFO of the company. So he's an incredibly important figure, and he's about to be a billionaire too.
Okay, so he's an important figure, but what I mean, you spoke to people who were in Brett Johnson's orbit. I mean, tell us a little bit about him. Is he as I don't want to say chaotic, but is he as extra as Elon Musk on every level? Or, I mean, it sounds like he's a little bit less
I would say
exciting.
no. I mean, he's willing to roll with the punches. Like when Elon Musk says, we need SpaceX to acquire XAI, which is losing a ton of money just a few months before we're going public. I mean, in a normal world, that would be a very extreme thing to do, and in Elon Musk's world, it's just pretty typical, and he's shown willingness to go along with that kind of thing, and that's paid off. In terms of the actual IPO process, my colleagues who cover the IPO and I have both heard about him being pretty willing to throw SpaceX's weight around when working with bankers. Like everyone wants to be a part of this deal, and therefore he can make pretty aggressive demands from them around, splitting up responsibilities and having lower fees and that kind of thing.
How
So
did he?
he's a good conduit for Elon in that way.
How did he even get this job in the first place? This seems like a really tough job to get.
Yeah, so in the 90s, he worked at an accounting firm. He worked at chipmaker Qualcomm. He worked at this digital media company for a second. Then he worked at Broadcom for a long time. In 2008, he lands at this chip maker called Mindspeed, which he started that job like right at the beginning of the Great Recession. The stock went down like 75%. He did a bunch of layoffs and cost cutting and sold off assets. It was a pretty tough situation, but he kind of helped this company dig out of a pretty deep hole, essentially. Then in 2011, he gets a call from a recruiter for this company called SpaceX, which he's never heard of. And he thinks at first that it's a storage company, offering you extra space. And the recruiter says, no, it's a space company. We make rockets. And he says, oh, I don't really know anything about that. But I've seen Star Wars, is the story that he's told about that first conversation. But he takes the job anyway and sticks around. And pretty soon, the Falcon 9 rocket is working better. Starlink launches, and SpaceX becomes a pretty gigantic company. In the subsequent 15 years.
So he gets hired as CFO right away. I mean, that's the only job he's ever had at SpaceX.
Yeah, he's the first one. It's the only job he's had.
And
Compared to all the other gigantic big tech stocks that SpaceX wants to be, traded alongside, it's pretty unusual.
And what is it about him that Elon Musk loves so much? I mean, earning Elon Musk's trust, let alone for the biggest IPO ever, is not a small task. Did you listen in any interviews with him? You talk to people who know him. Like, what is it about him that is so special to Elon?
I mean, I think he's just been willing to roll with the punches, basically.
Okay. And keep the books tight, I guess. Um, one of the punches you just talked about, the XAI merger, how is that going? What do we know about, how he's managing the integration there and finding synergies, as they say?
Yeah, I mean, XAI has definitely been, cutting costs. They've done, some layoffs. They've lost a lot of researchers. We've covered that pretty extensively. Like the actual research lab part is not going so great. My colleague Grace Kay had a good story about that last week as well. But from Johnson's perspective, like he's coming in and trying to generate a ton of revenue as quickly as possible, basically. And that has meant these gigantic compute rental deals that SpaceX announced with Anthropic a few weeks ago, or several weeks ago at this point. And then there was also this deal with Google that SpaceX announced on Friday, um, which the Anthropic deal is 1.25 billion a month. The Google deal is 920 million a month. These are obviously gigantic numbers, and it will mean that SpaceX gets to report huge growth in AI revenue this year.
Mhm.
But it's a totally different kind of AI revenue than OpenAI or Anthropic will be reporting. I mean, this is not coming from people paying a lot of money for Grok subscriptions. This is coming from XAI having poured so much money into building data centers and now trying to figure out what to do with them. And that's just it's totally different. And
You've reported a lot on the turnover in the Musk empire. Do you think Brett Johnson lasts in this role for as long as he has been in the role already?
I mean, he's like I said, he's been in the role longer than any Mag 7 CFO out there. He's been at SpaceX during a period in which Tesla has had four different CFOs, including one that left and then came back. I mean, it's unusual that he's been in the job so long already. So if he lasts like 2 or 3 years, that'll still be after SpaceX is public, that'll still be pretty gigantic. And some of the people I talked to for the story just made this point that being a CFO of a private company is a very, very different job than being a CFO of a public company. And when you're public, you have to do all these, tightly choreographed earnings calls where millions of people are going to be listening because it's SpaceX. You have to go to these conferences where your every word is watched in a different way. So it's a totally different job. And, I think we'll see if he's able to adapt or not.
Right. I want to ask you about another story that you published over the weekend. You wrote about the SpaceX mafia, or the alumni of the company who are no longer there, but still very much hold shares in the space giant. Tell me a little bit about who you focused on here. Notable alumni who have gone on to found their own companies.
Yeah, I mean the SpaceX mafia is quite big at this point. Like you said, there's a ton of billion-dollar plus companies founded by former SpaceX people. One of the people I talked to I thought was interesting was this guy Scott Morton, who worked on basically software for building and testing rockets at SpaceX, and he now says, we're going to apply the lessons we learned there to building software for a whole bunch of other things like, energy companies and other aerospace companies. So that they just raised at, I think 1.25 billion recently, and it's a very young company. I also talked to someone from this company, K2 Space, which has a ton of SpaceX alums and is building satellites. There's just this in general, there's this gigantic appetite among investors to invest in former SpaceX people because they have, just shown that you can do things in space that can actually potentially make a return. So there's just a ton of money being thrown at this area right now.
Other than the big moonshot ambitions that all these people seem to hold, did you get any sense for any other through lines that connect them? Are there any personality traits? Do they all hang out together? Is there a specific type of founder that they have taken? Maybe they're all trying to be the next Elon. Like, is that what connects them?
I mean, there's definitely this perception that they have a work ethic from being at SpaceX that other people from other companies don't have. And, I think that there yeah, there's this willingness to, pull all-nighters, fly to Texas randomly, go be super scrappy and figure out a particular part. Like there's definitely this like intensity and kind of single-minded focus on engineering problems that um a lot of SpaceX people say they have and investors respond to. um I one person I talked to, Scott Morton from Rebel, the software firm, he kind of described this bond that a lot of SpaceX people have, based on, the experience of working together on a rocket launch. Like you watch something take off, and everyone has spent months, grinding away at a tiny component or a particular tiny process, and if any tiny part, that one person has been focused on fails, the whole thing falls apart. And there's this like collective bond that all these people have based on those intense experiences. And a lot of them are, even when they leave, they keep in touch. They go to each other's weddings. They're all in group texts. They go to happy hours. Like it's a very tight knit community, I think. And as it gets bigger, we'll see if they continue that bond or not. But another question that I had, when I was talking to a lot of these alums is, whether the IPO is just going to make people so rich that they'll stop working. I mean, a lot of these people, even
What
ones
what
that have
what what do you think? Did you get an answer there?
uh, I think it seems like there's a minority that's gonna just like buy a cool car or a sailboat or whatever and like hang out. But a lot of people were very insistent that they didn't join SpaceX for the money. It was less clear, years ago that it was gonna increase in valuation so gigantically. And a lot of them insist that, maybe the money will enable them to like do a crazier startup or, have to raise less money and get to be more true to their own vision for something. But a lot of them say, they're not gonna stop working. They're not gonna stop, trying to
Right.
solve engineering
Well,
problems.
and I will say, I mean, one of the folks you had on your list, Justin Lopez. He's the COO of Base Power, and he's someone who we've had on the show. And I mean,
Mhm.
look, these ambitions are not small that they have embarked on themselves, and so they very much have set themselves up for long journeys ahead. But it was a great story, and I encourage everyone to check it out. I want to thank you for coming on, Theo. I imagine I will be talking to you, if not every day this week, nearly that much. That is Theo Wayt, our Elon Musk reporter here at The Information. One of the most important terms in AI that you might start hearing more about is called recursive self improvement. My colleague Rocket Drew wrote about that in today's AI Agenda newsletter. I want to bring him on to tell us what it is and why it's getting so much attention right now. Rocket, welcome back to the show. It's great to have you here.
Hey, Kosh, thanks for having me.
Okay. Recursive self improvement. This was not on the glossary of AI terms that you published, I think, a little over a year ago now. I think that one probably needs to be updated. What does this term mean, Rocket?
Yeah, that's right. I think if we did one for 2026, it would be at the top of the list. I mean, it's a mouthful, but we're hearing it all the time these days. It basically means AI models that are capable enough that they can create their own successors. So, say Claude Opus 4.8 could create Claude Opus 4.9. And at that point, humans would be out of the loop entirely on the research and development process that goes into creating AI models. We're hearing it a lot. Anthropic just released a big blog post talking about some of the evidence they're seeing that Anthropic is approaching or nearing this point of recursive self improvement, or RSI. There are a lot of startups that are raising funding saying they're working on AI models to train other AI models, or even AI models to design the chips that will then be used to create other AI models. Of course, AI is making a lot of progress at writing code, but so far there are parts of the research process that have eluded the capabilities of AI models, where for now, researchers are still better. Human researchers are better than the models. This is actually a fun connection with the SpaceX topic you were just on. To Theo's point about people, working on these rockets, spending a lot of time obsessing over little components that could break. The reason the Challenger space shuttle famously exploded is because the O-rings failed. This like very simple component on the rockets. They failed in the cold. The whole rocket blew up. And this is where we get the term O-ring automation, which is an econ term for a process, a production process that's bottlenecked by the weakest link effectively. So people talk about whether we'll see O-ring automation here in recursive self-improvement, where sure, maybe the AIs can write lots of great code, but maybe the research process is bottlenecked on this one step, which is humans coming up with the best research ideas or deciding which research areas to explore. But the idea behind
Okay,
recursive improvement is simply the models to do it all themselves.
Okay, so let me jump in here. So I want to recap a couple things. Number one, it just hit me. Your name is Rocket, and you're not a rocket reporter full time. I mean,
I
did you
know,
ever think
what
about that?
gives? Oh, what the
Okay,
heck?
okay,
Yeah.
we'll put that aside. I mean, I'm glad to hear that you seem to know just about everything you need to know about rockets. So I think if you ever want to expand, there is a beat waiting for you. But
Yeah,
let's go
Elon should
back to
just pat me in.
recursive self improvement. So the idea is that can we get the models to a point that they are good enough to then train the next generation of model, or basically, design the next generation of a new chip on their own? That's what this recursive self improvement threshold is. Is that right?
That's exactly right. And there's a sense that once we hit that threshold, the overall pace of AI progress could explode. I mean, I think
Okay.
everyone's familiar that AI has been going very fast already. But imagine you take all of these slow humans that make mistakes and you replace them with AI models that run very quickly, make fewer mistakes, and can accomplish a lot of tasks in a way that's coordinated, but in parallel. You could imagine that the pace of AI progress goes even faster than it's been
But
going so.
have we hit that threshold yet?
No, the answer is definitely no. They're
Okay.
writing a lot of code, but they're not writing all the code. And the code is the place where they're making the most progress, right? So the overall research process involves, coming up with hypotheses, designing the experiments to test those hypotheses, implementing the experiments. That's where the models have made the most progress so far. But then interpreting those results and using that to update your hypotheses, and then
Right.
running this whole loop. So the writing
And
the
so
code
this
part.
is the alarm that so Anthropic is sort of sounding the alarm in saying that, hey, we are getting to that threshold where the models could design the next generation of models. We're not there yet, but once we get there, there might be some implications here.
That's right. They think it's in view. They think it's on the horizon. Now, I think some people would disagree with that, but depending on if it's a matter of 1 year away, 2 years away, or even 10 years away, I think people have a sense that there is something kind of alarming about this idea. There's something kind of Terminator-y about it. It's like, wait, so humans aren't going to be involved at all in the process of creating the next model. We're just going to trust our current generation of models to train their successors, and then those will train their successors. Like, at what point are humans getting involved and steering this process? So that's the reason Anthropic is concerned about this possibility. They say you could end up with one model that has its own goals, its own desires, and then maybe the next generation of models inherits those same goals or desires, or ones that are even weirder, and the whole process could kind of run away from us. So as a result, one of the things that they're advocating for in this post that they put out is that they would like the ability, at least the ability, for AI labs to do some kind of coordinated slowdown or pause on the progress of AI capabilities. They're not saying we have to pump the brakes. They're saying, the brakes should be in there. So that was one of the things.
How likely do you think that? I mean, Anthropic is advocating for that, but are other labs on board with this so-called pause?
Yeah, I want to be clear that like the idea of a pause is not something that Anthropic just came up with. People have been talking about it for many years, and people have been pushing Anthropic specifically to adopt this position, which they're now taking, which is that, well, if everyone else is willing to pause, maybe we would be interested in pausing. Actually, Demis Hassabis, the CEO of Google DeepMind, said something similar earlier this year at Davos. He was asked in an interview, if everyone else paused, could we do some sort of coordinated détente in the AI race? And he said that he was open to it as well. OpenAI, for their part, is also working on, working towards recursive self-improvement, having an automated AI researcher. But plenty of their researchers and even some of their leadership are at least interested in the idea of the pause. Though, like I said, there's disagreement about when such a thing would actually be needed.
Well, and it seems like there's a bit of game theory here. Like, somebody has to actually pause, for any of this to really work out. And I mean, it sounds like they just all need to get in a room together and like collectively decide we're actually going to do it.
Right. But they all have to decide. And so there's work going into making sure that they could detect if any of the
Yeah.
other ones defected and verify that the other ones are actually following along like they said they would, which is easier to do when it's just, Anthropic, OpenAI, and DeepMind. It gets more complicated if you have government in the picture and they're also trying to coordinate a pause with China and with the labs in China, which any, truly comprehensive pause would have to do, of course.
So let me ask you this: the term AGI kind of drifted out of focus in the conversation, certainly as Microsoft and OpenAI have basically removed that from the definition around AGI has been removed from the negotiating table in terms of when the royalty payments stop and or keep going, stuff like that. Is this just the new AGI? Like, that's what it sounds to me. Is it's just a term that we don't really know when we'll reach it. We're kind of working towards it. It's something people are kind of fearful of, but is it just open to interpretation, or is there actually like a measurable thing that, no, we have hit recursive self-improvement. This is dangerous now.
Yeah, that's a great question. Okay, let me say one thing to defend, I guess, the merits of this term recursive self-improvement, and that's that when people said AGI, for a long time, what they really meant was recursive self-improvement all along. So in some sense, this is a refinement of AGI. Let me explain why that is, right? The idea of AGI was a model that's capable of doing all of the cognitive tasks that a human can do. That necessarily includes all of the tasks that go into creating an AI model, right? That includes all of the steps of that AI research process that I outlined. So AGI implies recursive self-improvement, which is part of the reason why AGI had so much oomph, or people were paying so much attention to it. People thought that if we reach that threshold, that might be what kicks off this recursive self-improvement loop. Okay, now people realize that intelligence is jagged, and there's all sorts of things that AI can't do very well now and maybe won't be able to do well anytime soon. But the recursive self-improvement milestone could be something we hit sooner. So I think that's why people, in some sense, you could think of it as a refinement. Another way to defend this is that, AGI kind of served its purpose. It was a useful term when we were like a few years out, like a few years ago, when it still seemed more distant, and we just sort of like roughly needed to gesture at like very capable AI systems. And now that AI systems are much more capable in some domains, rival human performance or exceed human performance at some domains, maybe that term has served its purpose and is no longer useful. So we need to refine it to something more specific. Now, that's my defense of it. I think, to your point, it is absolutely true that this term is really fuzzy. And we're going to realize again as we get closer to that threshold that we're going to need to refine it further. It's going to turn out that, okay, sure, Opus 4.8 created Opus 4.9, but like there were a lot of humans involved in creating the chips that went into that model, and humans are still involved in creating the chips that are going to run for the next generation model and maintaining the data centers where these things live. So, when you take a more holistic view, there are still going to be humans involved in
which is what you mentioned is one of the key human bottlenecks to all this is the chips. The chips is it's very much something that you need humans to develop. So the last question I have for you, Rocket, then is how close are we then to recursive self-improvement? Anthropic has put out this blog post. Do we have any kind of measurable criteria saying we are a year away, 3 years away, 2 months away?
It's a great question. I feel like estimates differ so wildly that like I don't want to stake a particular position. My cop-out answer is that it's clearly going faster, right? Like even if we don't hit that discrete point, like the trend line is clear that models are capable of doing more and more at all stages of that research process, and the complexity and the time horizon of the task that they can accomplish is getting longer and longer. So I think we see that pretty clearly, and there's no sign yet that that's going to stop, though it could in the future.
Great. Well, Rocket, I want to thank you for coming on. As always, that is Rocket Drew, our AI and robotics reporter here at The Information. Our next guest has previously sold a company to Amazon Web Services. He is now working on another startup, Eon, in the cloud backup space. The company was last valued at $4 billion. I want to bring on Ofir Ehrlich. Ofir, welcome to the show. It's great to have you here.
Thank you very much. It's great to be here.
So we were just talking about recursive self-improvement, which I'm sure is a topic that you also are geeking out about nowadays.
Wow.
Okay. What are your thoughts on it? Let's start there.
Yeah, it feels like, for a day before the ChatGPT moment, you would have told me that, we're going to have a software that can write poems. I thought that Siri is the best of breed. All of a sudden, something extraordinary happened that the day before that, we couldn't see that. And I think that's what's happening always with exponential growth in technology. You don't see it happening until it's already too late. And, when we started, when this started to be a thing, maybe 2 years ago, we weren't sure where is it going. Had numerous discussions with people about that, and people saying, where we reached the asymptote, it will never be smarter, it cannot evolve itself. At the end of the day, humans will be better, will be needed. And going back to your previous discussion, maybe humans will always be needed, but maybe to build the chips, and maybe like in the movie Matrix, to be the batteries so that we can run the machine. So I don't know, but it feels every day becomes crazier than the previous one.
Right. And we were just talking last week actually about how the models, when you're evaluating the effectiveness of models, sometimes the models know that they're being evaluated. And so you have to account for that. I mean, this would be another level to that matrix sort of scenario.
It is amazing. I think that the main issue, the problem with trying to withhold progress, let's call it this way, the problem with pausing is that there's so much competition, so much to gain, and it feels like a competition. It's a cooperation until you have something to gain. You think you have a significant edge, and then you pivot into making that happen. So you're seeing the models evolve themselves. You're seeing humans have the incentive to make these models evolve themselves and to make us eventually redundant. There's a question of I don't know if it's a Terminator scenario at the end of the day, or it's where the robots, maybe Anthropic or OpenAI should change the name to Skynet, or it's a utopian world where we're going through when we don't have to work because robots will do everything for us.
But do you think a pause is likely?
I don't believe a pause is. I don't believe the people who
because this feels like it feels like there would have to be a crisis. I mean, I'm imagining financial crises. I mean, the only reason the banks really ever got together was when there was a crisis. I mean, I'm imagining that is what you would need some acute event to have Demis and Dario and Sam and even Mira Murati at Thinking Machine, like they all have to get into a room together, but it's only going to happen when they need to.
I'm not sure that from each of their perspective, I'm not sure that it will happen on the same time. So I'm not sure that there will actually be a moment in time where all the relevant stakeholders think the same, that there is a crisis. Looking back at financial crises, usually you would have seen something like a debt crisis, something that's global. I think it's very hard for me to anticipate an objective crisis from each of those people's perspective. Unlike financial crisis in the past, I used to think that there's going to be a correction in the market. I still think at some point there'll be some correction in the market because, a market cycles and so on and so forth. And we thought maybe it will be a combination. It should be a combination of debt and something. So maybe data centers, overbuilding data centers at the same time with leveraging that too much, not enough to use capacity. But now with everything exploding now and so much competition, so much need, I just don't know what's going to happen first.
Okay, but what about just a hack? I mean, put the capital markets aside. Okay, the financial implications are one thing, but recursive self-improvement. I mean, we're talking about, and I guess AI that knows when it's being assessed. A hack seems like the most likely acute crisis that could then get everyone in a room together. No,
I don't believe that one's demise by a hack would be someone else's opportunity. Think not just companies, but also nations. And think China versus the United States, not just companies. And think the open source world versus all those significant companies. So it's a really good question whether all the stakeholders, including open source contributors, will actually go and look at this as a problem. And you're already seeing, we're focused on backup, and we started seeing in the last few months, not before, a significant amount of people I'm speaking with tell me either my company or personally I created a software that deleted data, an agent that deleted data from production that they didn't intend to. So that could be also the equivalent of hacking. You could say that you don't need a hack. You could just delete something truly paramount that everyone will say, oh my God, it's horrible. But I don't see all the world decides that one thing is the reason for everyone to stop. And there's so much incentive to go on.
But is that true? So even if, let's say you were at AWS, your company was bought by AWS, you were one of the top leaders there for disaster recovery. Okay, and right. I hear you on the nation versus nation part of this, but let's just say that a hyperscaler, AWS, and it's happened before, right? I mean, AWS has had issues in the past. We've been able to fix. They've been able to fix it.
All of them.
But I mean, look, let's just say that it's not just AWS. It's GCP. It's Azure. I don't know. Maybe they can't fix it. Maybe it goes on for a week. I mean, could that then trigger a pause of some kind?
I honestly don't believe it. It's always looking back at cloud is used to be a mini revolution compared to what happens in AI. And in the beginning of cloud, people probably don't remember there were lots of standards. And every time someone could go out to the standard, they would do that. And everyone wanted to follow AWS because they were the leaders. And we did disaster recovery and migration, and we've done that in AWS. And before that, we had an OEM with GCP. So we think we saw more than anyone else alive, or companies moving from on-premise to the cloud and seeing how their journey looks like in their eyes. Now, the revolution that happened there is nothing compared to what's happening in AI right now. But when you look through
it's smaller. You're saying it's smaller.
No, today it's way bigger.
Cloud the cloud was smaller than what we're seeing now. Okay.
Yes, cloud was smaller and it was still giant. And you could see people that were doing the transition, they were really, really afraid of doing that. They understood that they have to do it because they have no choice. Today, you see employees in companies, they don't just move to the cloud because it's to AI because it solves a lot of problems. It's true, AI is amazing, it's great technology. But when you're speaking to them, they're telling you they either want to move because it's cool. You're not a cool kid if you're not using AI, or you will become irrelevant. We saw a lot of people insisting on not using AI just a year ago and half a year ago. And you know what happened to them? They got fired. You see all of those companies firing tens of percent of their people to make room for the AI budget. And also they say, don't need so many people.
Let me ask you one more question before you go. You touched on this earlier, but you are in the business now of helping people adopt AI. You were in the business of helping them adopt the cloud. The on-prem to cloud transition is still happening in some cases.
Of course.
But it did require a lot of infrastructure build out. And that is similar to what we're seeing right now with AI. Do you think that the infrastructure build right now is overestimating or underestimating how much demand there will be for AI?
So I think that the problem is not the amount of capacity being built, but the fragmentation. So you're going to see some, let's call it clouds or neo clouds or data centers that don't have enough capacity, and a lot of vacant data centers that with lots of GPUs leveraged according to those GPUs and not enough usage. The fragmentation is very hard. Until now, you've seen consolidation. Cloud meant that instead of using many data centers, you were just going to say, hey, let's go to this company, Amazon, Microsoft, Google, Oracle, IBM and others that can do that better than me at scale. Now you're seeing a very interesting phenomenon. You see it going backwards. You're seeing smaller companies saying, we'll build our own data centers, we'll somehow know how to do it better, which I don't think right now makes sense. And they need to do not only build their own data centers, which is what everyone is doing, they need to buy GPUs, which is scarce. It's harder for you to do it when you're a small company, whether as opposed to a big company. Rent space, find electricity became a really big problem, and also do marketing, also do sales, get people to try and do and use your infrastructure. It's very hard. And I think that if you're going to see a correction in the market, it's not that all the market will go down, in my opinion. It's that a lot of these smaller data centers simply wouldn't have demand and will be they'll have a debt crisis in some sense. And this will be the problem. And I think that the resolution will be more consolidation. I think that you're going to, in a few years, after you're going to see this fragmentation, you're going to see defragmentation going back to a few key players. Not certainly it's going to be the same players that we have today, but a few key players.
How long away are we from that? Is that 2026, 2027? When do you start to see the cracks here?
Okay, so I tell you the problem. In 2025, everyone was saying 2026 is going to be the year. Now, everyone's saying, oh, 2026 is great. All those IPOs, maybe there are going to be data centers in space, etc. So whenever everyone thinks it's a bubble, so it's not a bubble. So that's what happened in 2025. But now everyone thinks they're safe.
Nobody thinks it's a bubble. Okay.
So maybe now we're at this point. Maybe now we're at November of 2021. But, with real technology behind it, not just free money, but very, very hard to say. I would estimate what in the next 3 years, we're going to see a correction. And I think that it immediately going to jump back up and consolidate. That's how
unless there's somehow a pause in AI development. If everyone gets in a room and says, which I hear you, I think we're in agreement that I don't think there's going to be a meeting anytime soon. But Ofir, I want to thank you for coming on. It was a great discussion. That is Ofir Ehrlich, the CEO and co-founder of Eon here on TI TV. Our next segment is with our sponsor, PwC. Budget predictability in the era of AI is a huge issue, and PwC has a close-up look at how many of the world's biggest corporations are handling those dynamics. I want to bring on Dallas Dolen, a leader at the firm's tech, media, and telco practice, to talk us a bit through what he is seeing in that arena. Dallas, welcome back to the show. It's great to have you here.
It's great to be here. Hey, Kosh, good to see you.
So, Dallas, we've been talking about Tokenmaxxing here on the show quite a bit, and it's a firm I'm sure is coming up a lot in your boardroom discussions. My question for you is, where do executives that you speak with land on the issue of Tokenmaxxing? Are they fans of it? Are they wanting it to end so that they can save some money? Walk me through it.
Sure. Yeah. Well, maybe I'll just start with an accounting joke, which is, the definition of EBITDA. I don't know if you've seen this, but EBITDA with two T's. The first one is tax, and the second one is tokens, and that's the new measure that that firms are going to use.
Haven't heard that yet, actually.
Okay, well there you go.
Good.
So breaking news today on a Monday. But yeah, I mean, I think there's a couple of factors that are coming into play. I mean, the biggest one is unpredictability of usage, and of course the conversation we've had a couple of times, which are around the ROI bit. So when you have the CFO is trying to do some level of predictions of whether it's the next set of financials for a quarter, or better, maybe you're trying to predict out a couple of years or a few years and looking at headcount and where you're going to be from an overall human capacity point of view. You start layering in the technology costs, and there's so many variables that come into play, but the number one thing is going to be, hey, what sort of machines are they using? Where are they using them? And how much software do I need, right? And historically, we had a really, I'll say easy-ish way of predicting this, right? Because everything was on a seat license basis. So if I needed a laptop and I needed everyone to have, access to the top, let's say 10 applications, from a business point of view, I could do that math really quick. Now we're finding that there's such high degree of variability, including in the hardware, right? We've started to see these announcements last week, for example, with NVIDIA and Microsoft on, the AI-enabled, laptops. These things are going to be much more expensive. Then you layer in the compute costs on top of it. I think it's becoming a near impossible task. And one CFO conversation that I had last week was they are trying to predict within a range of certainty of approximately 400%. So 1 time to 4 times the number, what is going to be their costs of compute.
How do you run a business in that and about 400% sensitivity analysis? That's saying that for every $1,000 I think I'm going to spend, if I've budgeted for 1,000, I'm okay with 5,000, right? 400% is 5,000.
Right. That's right.
But
I think
how do you? So what advice do you give to companies? I mean, how long is this going to last?
Well, here's the funny thing, right? We've been talking a lot about AI native companies now for a while. It's like, what could you build AI native and not have to have any infrastructure or any of these other things? The companies that are 100% AI native are actually far more sensitive, right? So sensitivity analysis to these types of costs is dramatically higher than a company who might be hardware or human reliant, if you will, in terms of the ability to drive the business and to run the day to day and keep the proverbial lights on. So I think what you're going to see is a high degree of variability in terms of impact between those who have, maybe newer out the gate, by the way, in terms of technology and reliance on AI. But how do you run a business? I think you have to get very comfortable that at the end of the day, you cannot predict within a level of certainty on that specific line item where you're going to be. Is that the highest line item? No, it's going to be just a line item to be concerned about. And that's the biggest concern.
What are the long-term? So I hear you on the long-term, you get comfortable being uncomfortable and being flexible. But if we go back to sort of the Tokenmaxxing movement, how long do you think that lasts? Do you think at some point CFOs are going to say, hey, look, you actually have to apply for approvals for token use in a much more governed fashion than it's being done right now? Do you see that coming?
Yeah, 100%. I think the way that's going to happen, at least what I'm already going to see, with a number of my clients and even seeing around, the services companies too, is they are moving the cost of technology into the P&L of the group who's operating the technology itself. So no longer is it sitting with the CIO or CTO. It's actually sitting with the P&L within the business. So if you're in manufacturing, if you're in the accounting team, or if you're in the treasury team, it's sitting there. That's actually putting the pressure, if you will, on the manager of that team to start making, quote, good decisions. Of course, that's a relative concept, but still good decisions around exactly what sort of compute and what sort of, monetary allocation you're going to make to the computational piece versus, the human piece versus the other variables that come into play. ROI becomes a part of the story. Also, really deliberate planning as it relates to what you're going to do with technology. Probably starting from the top is going to be the most important, conversation that's going to take place within the C-suites and at the board level, for a number of these companies.
Now, let me ask you about a topic we were talking about earlier on the show, the security impacts of vibe coding. And I ask this because, I mean, with the Tokenmaxxing movement is an encouragement that people should be vibe coding, they should be building their own apps. And we've had folks on the show talking about these citizen developers building their own programs that are innately more susceptible to security breaches or might cause havoc themselves.
Yep.
So, do you think that security breaches could be one reason that companies actually pull back on vibe coding or put more guardrails around it?
100%. And I think, even within the organizations that I've talked to with the CISOs and talking to our own CISO, that is actually the reason for a slower deployment of some of this technology, especially within regulated companies. You look at the banks, you look at the insurance companies, you look at medical, you look at, the accounting firms and the law firms. You're going to see experimentation, but you also see, we've seen this in the news, right? The news cycle has shown extraordinary downside for when you misuse some of the AI just in some of the legal filings, for example. It's embarrassing. It's not maybe breaking the law necessarily just yet, but now start thinking about it if if the person has created, because they're vibe coding, they've created some sort of, significant vulnerability, in the company. CISOs can simply not live with that. CEOs can't live with that. And so the directive, from down on high is going to be twofold. One of them is make sure the technology you're giving people have security controls around it. And the second one's going to be, hey, only probably go with the technology companies that you trust who are actually building it into the first layer of what they're able to do. That may shrink actually the zone, so to say, in which people are allowed to use this technology, including on what data and which individuals within an organization, are allowed to use it too. I think it's just the natural tendency, right? The pendulum swings back the other way. You go from, open claws and claw bots all the way back to, being heavily concerned about the security side of it. And of course, by the way, I mean, the cyber, companies out there are all going to AI managed, solutions, right? We're seeing this from Palo Alto and from Google and Microsoft and, the rest of the gang. They're pushing really hard on that agenda item because they need it to be on 100% of the time, right? It's no longer like when you have people, in the room watching the screens and seeing like where the vulnerabilities and where the potential attacks are. It's happening 100% of the time.
Last question for you then. So what impact do you think this has on the AI labs businesses and the companies that are selling the models?
Yeah, look, I mean, I still think it's yet to be written as far as like where all these ones play out, and people need to continue to work really hard to build the best models and work really hard to build the best integrated technology, especially into specific industries and to specific verticals, right? So people will build security in to allow it to maximize the impact that they're going to have in a given area. There's companies like the Harveys that will continue to do that, for example, in the legal arena. I think that's going to be something that we see going forward. And I saw that a lot in the conversations I had at New York Tech Week last week. The reality was everyone is still doubling and tripling, quadrupling down on their ability to build something that's so custom and unique and also be the first out of the gate to get there. So I think there'll be continued funding. There'll be continued effort on the part of founders. It's really yet to be written. This is early stages. But again, the controls are being put in place to ensure that we're not taking too many risks.
You were here for Tech Week last week. Did you catch any of the Knicks games?
I watched the Knicks game. This is a true story.
Wait a second. You're from Dallas. Hold on.
No.
You're from Dallas. Your name is Dallas. You're not a Knicks fan.
No. There's no affiliation with
No affiliation with San Antonio. Yeah.
Sports. It's just I was named after a movie. I was named after Tom Cruise's movie Alien. So no affiliation with Texas. But I watched the game from outside of a bar on Bowery Street where like 400 people were streaming out into the streets. And I got to tell you, it gave me renewed hope in civilization in society, Akash. Like it was the most powerful thing to see all these New York Knicks fans come together and enjoy themselves in a way they haven't enjoyed themselves in over 2 decades. I actually couldn't be prouder of the way that New York showed up and is supporting their team. And I don't sit here and root against the Spurs necessarily, but it could be the best thing to happen in New York in a long time. It'd be the Knicks taking this thing in the next couple of days in mass.
I thought, I don't know, maybe Mavericks fans have I figured maybe you were a Mavs fan, but maybe not. Maybe
Negative.
Maybe Texas is together. Anyway, the Knicks are playing tonight. Thank you for your kind words. We will let you continue to cheer for the Knicks Nation. And
Will do.
Dallas, I want to thank you for coming on as always. It's always a great conversation. That is Dallas Dolen from PwC here on TI TV. That does it for today's show. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. If you can't make it then, episodes are available on theinformation.com, on our YouTube channel, or wherever you get your podcasts. Make sure to follow us on social media, on X, on Instagram, on TikTok. I am already excited for our next show tomorrow. Have a great rest of your Monday. Go New York Knicks. Bye-bye for now.